Hey everybody, Steven Sitkowski here, leading educator on how to trade the financial markets. So, how do you like this stock market? You like roller coasters? Up one day 700 points, down the next 300, back up 400. And what do you keep hearing me say? Stay rational. So what does it mean to be rational when the market is irrational? Well, let me show you. We're going to pull up a chart on the SPY. So this is a proxy for the Standard & Poor's 500. And by the way, for those of you who don't know, the S&P 500 is basically 500 large cap stocks. So it's a really good cross-section of the stock market. So as we look, we can create a trend line. This is what the trend line would look like right now. So we see that the market is still basically bullish. So, the SPY opened February 14th at 273, now it's 292. So it's up about 10% in the last 6 months. So yeah, there's been a lot of craziness, but where's the craziness coming from? Mostly it's coming from our president's tweets. Jim Cramer was on and he said, I have President Trump's tweets open on my computer. Because all I got to do is see what he says. I know how it's going to impact the market, and it allows me to make short-term profits. So that's how you stay rational. Take a longer-term perspective. The other thing I wanted to cover with you today is another little lesson. We're going to compare two stocks that seemingly are the same. We're going to compare Visa with MasterCard. So as we look at the chart on each, pretty similar. So Visa was at 142, now it's up to 178. So what is that, a 36-point gain on a $142 stock? That's about a 20 to 25% rate of return, right? If we look at MasterCard, what do we see? Well, MasterCard is now at 274. It was at 219, so it's up about 60 points, 65 points, somewhere in that vicinity, which again, now that's about a 30% rate of return. That's in the last 6 months. But if we look at the fundamentals on both, on MasterCard, MasterCard is growing earnings at about, or sales at about 4%, earnings at about 9%. Visa, growing earnings at 2.77%, or sales at 2.7%, and growing net income at 7%. So when you look at the two, which one is the better selection? Well, it's pretty obvious that the winner, hands down, is MasterCard. So this is the way that you can compare stocks that are basically the same, banking stocks. So if I wanted to compare, for example, Wells Fargo, so let's look at the numbers on Wells. Wow. So Wells is actually flat on sales. Their net income is up 3%. What if I wanted to compare that to Bank of America? So their sales, not much better, 0.13, and their net income, 1.40. So I would go with Wells Fargo over Bank of America. Why? They're growing their net profits twice as fast. So this is the way that you can always make sure that you're in the best of the best. So here's the moral of the story today. Keep a cool head. Market is still trending up. Follow your president's tweets. I'm telling you, there are some gold nuggets in there. And now you know how to compare stocks that are in the same industry. If you'd like to follow me, be sure and subscribe to my YouTube channel, Steven Sitkowski. Click on the notification bell and you'll know every time I post something new. Till next time, God bless. Have an amazing day. Bye for now.